I'm sure I speak for everybody when I say bloody coronavirus. I'm sure we're all having fun right now. I have been getting lots and lots of financial type questions regarding our friend the coronavirus. So I thought it might be helpful if I get those top questions I've been asked and answer them in this video. I'm going to be covering things like superannuation, the share market, investing, government stimulus, the things banks are doing, redundancy and losing your job, insurances, and much more. I won't be talking about toilet paper because I think we've all heard enough about that. What I'll do is I'll put a list of the questions that I'm answering in the comments below, so you can check that out to see if there's anything of interest. If you have any follow-up questions or anything I don't cover, just add a comment below and I'll try my best to answer them. So yeah, without any further ado, I think we should crack a beer and get on with your corona questions. Okay, so question number 1. What should I do with my super? A lot of people are seeing their super drop fairly drastically at the moment, so what should you do? Look, you've heard it before. Superannuation is a long-term investment. If you have a look at this graph that shows the market over the past 100 years, it's taken a pretty hefty whack almost every decade. 65% down in the 1970s recession. So for most people, if you're under the age of 55, riding out the storm is the best option that you've got. Don't forget as well is if you're employed and still contributing to super, or your employer's contributing to super, you are buying shares at these lower amounts. So if share market goes down by 65%, you don't need it to go back up to 65% to get where you were, due to the magic of what's called dollar cost averaging, which just basically means you're buying the share prices at that lower price. So what if you're over 55 or you're currently retired? I do think that the first step is to have a chat with a financial advisor if you don't already have one, as there are things we can do to flatten or affect the impacts of what's happening right now. The other thing is for people who are retired, if you're not aware, people who are funding their own retirement from superannuation have a minimum pension amount they have to draw down every year. As of today, the government has reduced that by 50%. So if your minimum drawdown was 4%, you can now reduce that to say 2% if that's appropriate, and if you can survive on money outside of super. By doing that, and you can keep more money inside super and inside your shares and your investments, it will give them more time to go back up in value. So looking at that or talking to your advisor is definitely a big one to consider. The next question is, what bank and government assistance is currently available? So before I go over these are constantly changing. They're literally changing as I'm recording this video. So this is only accurate as of the 22nd of March, and they will continue to change. What I'm going to do is just basically give you a quick headline of all the different things that are available. So if they sound like they apply to you, maybe just go and do some more research for that specific one. Okay, so they have announced what's called a coronavirus supplement. So these are people who are lost their job or are currently looking for a job, youth allowance, someone who's getting a parenting payment, and they've increased it by an extra $550 a fortnight. So effectively doubling the usual payment to make that, give those people more money. There was the economic support payment we heard about last week of $750 to people who are currently getting a Centrelink benefit, who were on Centrelink benefits as of the 12th of March. That will be paid on the 31st of March. There's an additional $750 to people that will be paid on the 13th of July. Again, if you're on Social Security payments, but you don't qualify for the coronavirus supplement. So let's say if you are getting that extra $550 a fortnight, you won't get that $750 that they're paying in July. They're also changing the deeming rates, which basically will make more people eligible for things like New Start and Job Seeker payments. So if you do have assets and you otherwise wouldn't have qualified, more people will qualify due to that reduction in the deeming rates. For small and medium-sized businesses with a turnover of under 50 million, there is an eligible tax-free cash payment of up to $100,000. This is a payment of 100% of the tax that you've withheld for your employees that you would usually pay to the ATO. And as of yesterday, that payment had a minimum of $2,000. That's gone up to a minimum of $20,000. So if you are a director of a company and if you're paying anyone PAYG, you definitely want to look into that one. They've also increased the ability for small businesses to borrow money, and the government are going to be guaranteeing some of those loans so that you'll have no repayments for the first 6 months, and the banks are going to be more likely to lend you money over periods like a 3-year period. Now, for the average Australian, the big four banks have announced repayment holidays on your mortgage. So the ones I saw were, say, 6 months, and it was just the big four banks, but I'm sure the other ones will, follow suit very, very soon. The PM also literally said there is more stimulus coming. So if you feel like you didn't qualify for any of those, just keep your ears open and pricked, or whatever your ears do, because there is more stimulus coming. If you're under financial hardship right now, can you get money out of super? And the answer is yes. There's always been an ability to take money out of super for financial hardship or under compassionate grounds. However, it was never the easiest thing to do. The government has changing it, so it is a much easier process. If your hours worked reduced by 20%, or if you are a sole trader and your business has gone down by 20%, you can apply for a release of up to $10,000 this financial year and $10,000 next financial year, so potentially one in June and one in July. You do it through the MyGov website. If you are in financial stress, by all means, take account and take advantage of this feature. However, small word of warning for if you don't need it right now, maybe consider the long-term effects. If you're taking money out of super now, well, you're locking in the losses of the marketplace right now. So you are taking away your ability for those investments to go back up in value. So especially over the period right now when the market is so volatile, if you can hold off on that payment or not take that payment, I would consider it. So just, not saying don't do it, just consider it before you do. The next question is, does my income protection cover coronavirus? So you might have income protection, you might have life insurance, you might have total disability insurance, and you're looking at all these reports for people who have travel insurance, and they've got this clause in the background that says, sorry, pandemics are not included, and wondering to yourself, does my income protection cover me for corona? Short answer is yes. It's policy by policy basis, so I'm giving you a broad general brushstroke. However, most of the companies that I've been talking to don't have a pandemic clause in them. So most likely, yes, if you get sick for a number of months, your income protection will cover you. Now, if you don't have income protection and you're thinking about getting it, you probably want to act now. Before I made this video, I did a little bit of research, and the industry funds have started adding in the clause that says if you're adding insurance now, it doesn't cover coronavirus. Most of them had the date of the 12th of March 2020. However, the insurance companies that we use as financial advisors, the retail insurance, most haven't started adding those coronavirus exclusions. So if you are interested, now is the time to be investigating or reviewing your income protection. So the second part of that question is, does income protection cover me if I lose my job or if I'm made redundant? Unfortunately, the answer to that question is no. Income protection is for if you get sick or ill or hit by a car or unforeseen incidents. It's not if you lose your job or you're made redundant, which is a bit of a shame. Look, it is case by case, so by all means, if you are made redundant, go and check with your provider. If you do have income protection and you lose your job or made redundant, you can give your provider a call, and some of them have a feature called premium freeze, so that you can stop your repayments while you're out of work. Sometimes it's 3 months, sometimes it's 6 months, sometimes it's until you find a job, but I would investigate that. I also did find a company the other day that does have a redundancy feature in it. So if you are worried about being made redundant in the future, yell out if you want more details about that. And the next question is, if you are made redundant or lose your job, how long should you wait before going to Centrelink? And that's a really interesting question, and have been asked by more than one person. And the answer is, don't wait. I'm recording this video on a Saturday, so if you lost your job or on Friday, you should be at Centrelink Monday morning for many, many reasons. Firstly, the sooner you go, the sooner you're going to receive payments. The other thing is that as the government releases these stimuluses, you want to be, eligible as they bring them out. Unfortunately, there probably is going to be a large influx of people heading down to Centrelink. So you want to go first thing in the morning. You need to physically go to Centrelink to apply for a CRN number. Jump on their website to find out the identification that you need, because that's the hardest part, is making sure you have passports or whatever they want. After that, you can do most of it online. Just go to Centrelink ASAP. Should you be investing right now? This is probably one of the most common questions that I'm getting right now, and potentially the inspiration for this video. And it's a difficult question to answer, and there's not a black and white answer to this one. The one way I'm thinking about it is this: if you weren't investing in the share market or considering 3 months ago, right now probably isn't a good time to be getting in for a number of reasons, education being one of them. If you were considering getting in 3 months ago and all this stuff happened and now you're thinking, hey, there might be a really great entry point, you know what? You're probably right. There is really good potential right now. If you are thinking long term, and the other thing is, are you willing to lose 100% of your money? If you can put your hand on heart and say, the money that I'm investing right now, I'm happy if I lose every last cent of it, that's the kind of mentality you need to be in if you're willing to be investing right now. The other part to it is, think about the potential upside. Say you've got 10 grand and you invest it in a single share and that goes up by 25%, you've only made 2.5 grand. So you're risking losing all of it to potentially make 2.5 grand. That is an extreme example, but that's the kind of head frame you should probably be in. The other part is it is a crazy time right now, and some businesses are going to go broke. It's just unfortunately a fact. So investing in direct shares to one company is, there's an extra level of risk there. So if you are thinking about investing, I'd be looking at ETFs or managed funds that invest across a broad number of shares to diversify your risk. Can you make money from a falling share market? Again, another common question that I've been getting asked, and the short answer is yes. However, and a big however, before I answer this question, I will say this is not advice. And I'm not saying that in the way that financial advisors say that because they don't want to get sued. I'm saying that in this is not advice and I don't think you should do this kind of a way. However, it's an interesting question and it's an interesting answer, so I'm going to answer it anyway. Before I do, check out this chart from Goldman Sachs and their predictions of the US market across the following, this year, 2020. March 16, so it's a little bit old, but that's them showing where they're at. So they think the market's going to drop a little bit more and then bounce back up very, very quickly. So consider this and consider timing risk when you're thinking about trying to make money from a falling share market. Okay, so how do you make money when the share market is going down? Usually what happens is you buy a share for $10, sell it for $12, and you've made yourself $2. So how can you possibly make money from a dropping share market? Method number one is the simplest, but equally as risky, the withdrawal method. So you get out of the share market, wait for it to drop, and then get back in and hopefully ride it back up. Yes, you will profit from that if you can time it accurately. Method number two is investing in ETFs or managed funds or something that has an inverse correlation to the share market. So there are funds out there, and this is an example of an ETF. I won't give you the name of it. I'll let you do your own Googling. Often they're called bear funds or shorting funds, and effectively they've got an opposite effect to the market. So if the market goes down, these go up. So if the overall market's going from $10 to $8, this would go from $10 to $12, and thus you're making money as it goes up. So lastly, the more advanced / common way of making money from a dropping market is you have options, which is the option to buy a share in the future, but not the obligation, or something called CFDs, so contract for difference. And the best way to describe this is you get your sports bet account where you're betting on things, and in this case, you're betting on the share market, and you can bet whether it goes up or goes down, and you can bet on how much you want to make per point of it going up and down. So you can say, I want it to bet that the share market is going to go down 10 points, and I'm willing to risk 10 grand through that drop. Highly, highly risky, and you can lose a lot of money doing it. But yes, it is available. You can make money from the share market going down. How do you invest in the share market? So I find during these kind of events, the average person who generally wouldn't pay any attention to the share market pricks their ears up and says, oh, how do I actually do this? Like during the Bitcoin phenomenon, everyone wanted to figure out how to do Bitcoin. And during these kind of events, people are asking more and more, what's the actual process? I have made another video, which is just called, 3 steps to buying shares. So you can check that out. Short version is you need to open up a trading account, put money in the trading account, choose what you want to purchase. Every share on the share market has a code. So like Telstra is TLS. You would then say, I want to buy X number of shares for X amount of money. And if you buy $10,000 worth of shares and it goes to $20,000, you've doubled your money. When it comes to which stockbroking account should you use, often people, when they first start, they use the one that their bank is using. So if you use NAB, you use NAB Trade. If you use Commonwealth Bank, you might use CommSec. The more you get into this, you might find certain platforms have cheaper fees or more options or charts or whatever. But yeah, that's the process. What should you do moving forward? So I was talking to my parents today, and they immigrated from Ireland during a recession. They arrived in Australia with $4,000 and spent $1,000 on a car and $1,000 on a bond. And what their comment was because they'd been living in a recession, they were so good with money and their budgeting was so good that they were able to survive and get a job and flourish. So I think that the main thing that we all can probably learn, and the silver lining in all of this is, if you are having money problems, you may potentially get a better grasp on your finances and move forward through the rest of our lives with a better grasp of your budget. So yeah, if you're sitting at home in self-isolation, maybe have a look at your budget, review your insurances, review your monthly expenses and see where you can save money. When you're able to, try to build up your emergency fund so that when this happens next time or something unexpected happens in your life, you have an emergency fund. Okay, and to finish off, I thought I would do the lightning round! Should I invest in toilet paper? No! Can I make hand sanitizer at home? Yes, you can. The main ingredient is aloe vera. I'll put a link down below. Can I socially distance myself from my bills? I wouldn't. Try to keep on top of your bills because at the end of all of this, you're gonna wanna have a half decent credit file. Can I start a small business today and get the government stimulus? Good question, ask your accountant. Can a financial advisor help me right now? Yes, I think I can help probably 9 out of 10 people right now. So if you need some extra help, please don't hesitate to contact us. So, thank you for watching. If you like this video or you think somebody else will find it beneficial, please like and or share. Subscribe to us on YouTube, and a honest, sincere good luck to everybody. The world is a bit insane at the moment. Cheers.